You know, everyone is talking about Apple and it's going to commit all this dough to not only pay $35 billion in U.S. taxes, invest tens of billions of dollars more the next 10 years, hire 20,000 folks. But where does it have the wherewithal to do that? Of course, no surprise, bring a lot of money back home from abroad, courtesy of these tax cuts. So that has been the wind at the back of a lot of these tech giants. To whether that can continue with the Wall Street Journal's Greg Ip. What do you think, Greg?
Hey, Neil. So I think one of the reasons these companies are doing so incredibly well is they have terrific products, obviously, but they also have, let's face it, monopolistic or quasi-monopolistic positions in the markets in which they sell. And that's a great situation to be in. It's great for profits. It's great for stock prices. I think the question going forward for customers, investors, and policymakers is going to be, are those monopolistic positions coming at the expense of customers and competitors more broadly? Thus far, regulators in the United States have said no, but if you look at Europe, you've seen that when the question is looked at through different eyes, sometimes they say, yes, that is hurting customers. That is something I think these companies and their investors have to be aware of.
I always wondered, too, Greg, to your point, whether companies get a little bit cocky, like Amazon ending, the year on buying everybody and his uncle, or at least threatening whole sectors, even sniffing around. Normally, there comes a point at which regulators or government overseers start saying, wait a minute, are we at that point?
Well, I think we've already seen that. There have already been antitrust accusations brought against Google, for example, in the search space. They were not ultimately upheld, but they were sort of like forced to settle on other things. But I think if you look back in history, Neil, it's interesting. If you look, for example, at AT&T or John Rockefeller's Standard Oil, we forget this now, but those were considered the technological innovators of their day. Their reputation was then what Apple's and Google's is today. And while they were building up their market share, they really were innovative geniuses. But once they had locked in those markets, their behavior became very predatory, and they would just do anything they could to prevent competition from coming along. And when you hear the volume of complaints often leveled at these high-tech companies, you wonder if we are moving in that direction. As I said, it's hard to prove that if you look at the numbers. These guys, they invest a tremendous amount. They make great products. They're well loved by the public. But I think you're right, Neil, is that with success and dominance comes a certain bit of arrogance. It's a kind of human nature. And that's why I say this is a space to watch very closely in coming years.
It can sometimes work your way, though, if you're concerned about that happening, taking place. And I agree with you. That's more likely than we appreciate. In the AT&T case is an example. The breakup started and the investigation started under a Republican administration, and that was Ronald Reagan. And you could make an argument with the baby bells and obviously everything that boomed from there, that was a good thing in retrospect.
Right. I mean, the funny thing was nobody really complained about the quality of their phone service when AT&T ran everything. But with each passing year, somebody had a new innovation, a new device, things like the Carter phone and the Hushaphone, things we haven't even heard about for years, but they were new devices. MCI wanted to do long distance over microwaves, answering machines, fax machines. It was very hard to introduce and really get traction with those products because AT&T was so proprietary about what it allowed to hook up to its equipment, because it was trying to protect its monopoly in equipment and manufacturing. It is hard to find exact parallels these days, and I think one of the reasons, Neil, is because these companies are careful not to sort of make the mistakes that other companies did. But if you look at the case of Microsoft, just for example, that one dragged on for years and years.
That's right.
The government never won a conviction. They actually ultimately settled. But the fact that Microsoft knew that the government and its competitors were always looking over its shoulder probably had a restraining effect on its conduct.
I think that's a brilliant analysis. I think you're exactly right. So you should run the other way, Greg, just so you know.
Okay.
Greg Ip, the Wall Street Journal chief economics commentator, is actually right. Go back in time and relive that. It got a little too cocky, and then, well, you know the rest of the story.